Now it's time to bring in our next guest, though. That's going to be Alan Hibbard, Precious Metals Alternative Money Specialist at GoldSilver.com. Welcome back to the show, Alan.
Hey, Tom. Thanks for having me.
All right, so we got equity markets at or near all-time highs. We've got risk-on mode in gold. We've got oil falling. That's probably helping equities here a little bit. What's your take here on the equity market in general, Alan, as it compares with other asset classes here in the market?
Well, equities are always everyone's first choice.
Yeah.
But really what I'm paying more attention to is gold, and what everyone's paying less attention to is silver. So, I think markets are absolutely crazy right now. There is a lot of risk on, as you mentioned, but there are a huge cohort of investors that are turning to risk off mode, buying things like gold, silver, and Bitcoin, trying to take custody of physical assets to protect themselves from all the volatility and uncertainty that we're seeing. So it's really sort of a tale of two different types of investors. And we don't know how it's going to play out. Maybe the abundance of caution is unnecessary, but we'll see in due time.
Yeah, you bring a good point here, Alan, and I kind of wanted to dive a little bit deeper on this gold move that we've seen to record highs, pulling back just a little bit today. But it seems like central bank buying's been pretty robust across the globe. But then now you've got investors, and historically, when I see the gold bugs start hooting and hollering, they get punished from that type of move. But it seems maybe a little bit different this time, Alan?
Yeah, I think it is a little bit different. So as you mentioned, we've seen the central bank gold buying since about 2015. So it's been 9 years, and that's coming on the heel of 35 years of central banks being net sellers. So these are multi-generational shifts that are taking place here. And that bull market in gold that's been going on the last 9 years has been happening despite interest rate moves. So we had the Fed take us off zero in 2015. Bring us back down to zero during the COVID recession, and so on. So up, down, sideways, no matter what interest rates have been doing, gold has been going up. So things are absolutely a little bit different here. And as you mentioned, retail investors are now getting in. We saw that, at the early part of this year, Q4 of last year, with the Costcos and the Walmarts and so forth, selling gold to a lot of investors who have never bought it before. So there is a big shift here. A lot of people are turning to gold, and it's up already over 30% this year. So it's a great year for gold and silver.
Yeah, and you've got that added boost to the Fed cutting interest rates at this point, lending some support to gold. Now, would you advise maybe investors at this point say, hey, there's still upside in gold at these levels, even though we've had this magnificent rally?
Yeah, I would. So there's really two main ways to look at the attractiveness of gold. Sometimes it's as a hedge, which is really downside protection. The other times it's actually most attractive for upward appreciation compared to other asset classes. So sometimes it's one, sometimes it's the other. We're in a case now where it's actually both. And you can tell that if you look at the valuation of gold compared to other assets like equities. If you look at the Dow gold ratio, for example, we're up around 15 right now, which suggests that the Dow has been performing better than gold lately. But in order for that to return to its long run average, gold is going to have to outperform the Dow. And so I would expect that to happen over the next few years, maybe by a factor of 2 to 1, possibly 4 to 1, to bring that ratio back in line with its long-term average. So yes, not only is gold attractive as a hedge against so many different things, in this case, it's actually super attractive for price appreciation. So it definitely is a good idea.
All right, let's pivot over to, you mentioned silver earlier. That's at 11-year highs here as we speak. So we're getting a little bit of push back into that, a little bit more industrial. Then you've got copper that's done pretty well over the last several weeks after a big slide in the summer. You see those as silver and maybe copper, some outliers here. You got stimulus over in China. Everybody's saying the economies are weakening, but not here in the U.S. You got GDP growth at 3%. Are those good areas?
Yeah, so I'm a big fan of silver, and as you mentioned, it's at an 11-year high, but it's still off its all-time high, so around $50 an ounce, maybe 52, depending which source you look at. And so it's been a sort of quiet rally in silver, but silver has actually outperformed gold this year. It's up 34% to gold's 30. So silver is having a fantastic year. It's on pace to do 49%, which is kind of staggering, and it still is extremely attractive. And the story with silver is really one of an industrial metal, less so a monetary metal. barrel. And we've actually had a structural deficit in silver. So all that silver that's demanded by different industries like electronic vehicles, consumer electronics, photovoltaics, I mean, you name it, everything electronic uses silver. And the demand for all that silver for the last 3 or 4 years has been too large to keep up with supply. So we've actually had demand outstripping supply, and that's the main driver of these price moves. So I'm expecting that to continue as long as the economy keeps booming. The price of silver is going to keep going up. So that's what I'm expecting.
Now let's pivot. We can't leave out Bitcoin here, Alan, because that's seen a nice move to the upside. We're just above, just near about 66,000 here. But since those all-time highs in mid-March, we've seen lower highs in this. So the trend's still lower. Is this a breakout mode here for Bitcoin?
Yeah, it's super hard to tell. So Bitcoin is obviously extremely volatile. And yeah, after those March highs, we've seen a lot of choppiness moving slightly downward. But on balance, Bitcoin is up 48% on the year. And a lot of investors still haven't figured out what Bitcoin is. Some of them just flock to it for FOMO. You know, they just want to be a part of the Bitcoin story. And if it pumps again, they want to say they were in it. They want to, you know, experience those gains. But I mean, really, the story with Bitcoin is sound money. Like, that's the most important thing to understand. It is like digital gold. And the more investors start to realize that, the more they're going to move into it. And that includes investors of all sizes. So once Bitcoin starts to stabilize a little bit, as it has done over time and as it will continue to do, we'll see bigger and bigger investors moving in with larger and larger portions of their capital. So eventually, the price relative to the dollar is going to go up, just like it does for gold.
Yeah, and you sit here and wonder about the election that's coming up, because both candidates at this point kind of supportive, maybe trying to get some votes on one side, maybe not on the other. So maybe some additional volatility here into the election for Bitcoin also. But that has definitely been lending some support as the new administration will probably be a little bit more bullish than previous. All right, great discussion here, Alan. Have a great day.
Thank you. Thanks, Tom. You too.
All right, that's Alan Hibbard, precious metals alternative money specialist at GoldSilver.com, breaking down the precious metals and Bitcoin.